Hi, this is Jubak, and welcome to my YouTube video for September 15th. I'm just back from Yellowstone National Park. I had a great time, but there's no baseball, so I couldn't live there. I tried to get the bison to play, but no luck. If you want more of my stuff, go to jubakpicks.com. That's my free site. 3 portfolios. Jubak AM, my subscription site. That's 6 portfolios. The links are down below. Today's title is Time to Worry About China 2, TOO. Now, a lot of the worry right now, a lot of the worry that's driving the market is about it being September. We hit a high for September on the 2nd, and it's pretty much been downhill since then. We did have a bounce a little bit on the 13th. It looks like we may turn green today for the close. But other than that, it's been down, down, down. We're not talking about a big drop. September doesn't tend to produce big cataclysmic falls. It just tends to slide. So far, as of yesterday's close, we're down about 2.1% for the month. And you sort of understand why. Valuations were high. We came out of a great earnings season. We got worries about the Fed. We got worries about inflation. We got worries about the Delta variant slowing the economy. All those things going on that really produce a certain amount of worry. And at some point, the market becomes a kind of, if people worry enough about something bad happening, they basically produce the bad things. So you got a lot of worry out there, slide. So that's where most of the talk has been. But I think we really need to throw China into the mix, because the news coming out of China, the economic news coming out of China, has been really pretty grim over the last month. And yesterday we got August economic figures that are even grimmer than grim. So that, for example, August retail sales were up just 2.5% year over year. Economists had expected 7%. It's an incredibly low number for the Chinese economy. And we're seeing things like also construction investment. That's investment in construction, down 3.2% year over year. The reasons for this are pretty clear. China has really cracked. China has a kind of no pandemic policy. So when they saw signs that the Delta variant was going to crop up in China, they really smashed down on it. They put restrictions on. They basically closed down Wuhan again. So they've got that going on. But they've also got a number of government policies that are really hitting growth. That the government has cracked down on e-commerce and internet companies. They have cracked down on gambling in Macau. They have cracked down on risky financial products, which have been used really to finance home buying. So all those things together mean that China has really, we got 2 things going on here, and I think we're seeing this really bite. So if people know one Chinese stock, they know Alibaba. And this is the chart for Alibaba, the biggest e-commerce company in China for 2021. And you notice that it is basically down and down and down. But then we get to July when it's not just down, but it really plunges off a cliff. And what's going on is that the Chinese government has decided we're not sure that private companies really own the data from their own consumers. Maybe the government really does. So what we've got is Alibaba as the sort of flagship stock being down about, well, as of yesterday, it was down 31% year to date for 2021. Same thing if you look at charts of Tencent Holdings or JD.com. All these companies are down, not as much as Alibaba, because Alibaba really is like, if you own one Chinese stock, that's the one. If you want to sell one Chinese stock, that's the one you sell. Okay, so that's been the problem there. But then let's also look at this is the gambling sector in Macau, where basically you've got casinos, you've got bundling of people to go to casinos, you've got VIP, and the Chinese government has basically said, hey, we're not sure we're really in favor of all this spending on casino trips, and we're not going to just crack down on the very highest rollers. We're going to crack down on this big category called VIPs, which is really the bulk of the market. So this is a chart for Sands China, which is the Chinese property, the Macau property for Las Vegas Sands, and you notice that here's when new regulations went into place. This is the 9th. We went from 34 to 22 on the 15th. A huge drop. The drop in this stock is, well, about 25% for the year. I don't think there's any real bottom here, because people are now talking about tour operators in Macau basically having to shut down, no traffic going to Macau. And you've had people saying things like, there is no future for Macau. I don't know whether that's true or not, but until we sort of work through that, we're not at the bottom for this. Now, the real issue here, if you're an investor, it's pretty easy to sell your China stocks. I recently advised people to get out of Alibaba and Tencent, and pretty much anything else I own in the sector. But China is you know, the real driver for big parts of the global economy. So the question is, what happens now? So what I'm really worried about is a negative feedback loop where you get slowing economic activity in China, leading to slowing of the global economy that then feeds back into slower growth in China. So one of the sectors I'd look at here is copper. Copper has really been up all over the place. This is a copper stock called Southern Copper, which I own. It's probably my favorite copper stock because it's a low-cost producer and has lots of production capacity ahead of it. But you notice that after May, when it was really, everybody was saying copper, 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 because look what's happening in China, and electric cars need more copper, and so do windmills. It's basically been falling off the cliff because we're worried about growth slowing in China. We're worried about things like a shortage of silicon chips for cars, crushing production of cars. So all those things. So China slows, copper slows. What's the feedback? Well, China may be producing fewer chips, maybe producing fewer silicon cells, and that would then slow the economy more. So the question really is, you've got the government in China really restricting economic activity in major parts of the Chinese economy. You've got the Chinese economy slowing in the effort to fight the pandemic. Whether those things together wind up producing some kind of worse than expected drop. And certainly there's one of the big problems in China always is there's a tremendous amount of potentially bad debt, risky debt floating around. We've recently seen this in a Chinese property developer called Evergrande. Evergrande has been funding its properties by offering investment accounts, money management accounts with a bigger return than you get from putting it in the bank. God only knows what these things have been going, where the investment has been going, probably into housing that they can't sell. But basically the companies had to say to investors, hey, you know, we really can't pay you what we promised. And the question is whether this then rolls out into other parts of the economy, rolls into other parts of the sector, and then damps the Chinese economy as a whole, where there's a tremendous amount of potential bad debt floating around in all the state-owned enterprises. So if you're looking at sort of September, it's a negative month. If you're looking at the possibility that September might turn into something worse than just the usual slump, remember October is the month of big crashes. China is something that I'd look at and worry about. So despite the fact that we may actually we're actually looking at 2 up days this week so far, I would say that I would still worry about September. I'm not ready to buy the dip. We haven't had a big enough dip yet. And I think there's more uncertainty to come. Thanks for watching. It's been Jim Jubak. If you want more of my content, you can try my free site, jubakfix.com. You can buy my subscription site, jubakam.com, if you want 6 portfolios as opposed to 3. If you like this video, give us a like. Thanks very much.